What is happening, investors? I hope you're all having a fantastic weekend. We are coming at you today with another video, and we're going to be speaking about 10 stocks that I am going to be watching going into next week. Now, these 10 stocks are going to be split into 4 different categories. So it's just going to be one of these nice chill videos where we get to sit back and just chat about some stocks, and hopefully I can give you some insight. I can show you some stocks that aren't on your portfolio yet or aren't even on your watch list yet, that you can go and do some research into. Do remember though, I'm not a financial advisor. The stocks I speak about today and everything I speak about are just my own thoughts and opinions. Don't buy something just because I could buy it. With that being said, guys, please drop a like on the video right now. I appreciate it massively. It helps me be seen by more people. It really does mean a lot to me. Subscribe if you're new around here. We're on the road to 4,000 subscribers, baby. And drop me a comment, let me know what stocks you are looking at going into next week. But without further ado, let's get straight into the video and the first kind of stocks we're going to speak about today. So what I want to start off with today is I want to speak about the hype stocks, and I have 2 of these to speak about. And what I want to speak about first is Nat. If you saw yesterday's video, I spoke about what a pump and dump stock is, and a lot of people are now thinking Nat could well have been a pump and dump stock. So why are they on my watch list? I've already made it quite clear that I don't plan on buying them. I didn't buy a position in them. So why are they on my watch list? Simply put, they're a hype stock right now. I want to stay up to date with them and I want to know what happens. In the last month, we've gone from $4 up to $9, back down to $5. There's just been so much movement in both directions. And why specifically I'm going to be watching them next week, and more specifically why I'll be watching them tomorrow, is, where's it gone? Their first quarter earnings is to be released on Monday, May 18th, which is tomorrow. You see my calendar there, it's May 17th right now. So that's why these guys will be on my watch list. I've spoken about these guys in the past. I'll leave a link or something on the screen if you want to check out my videos on them. But yeah, that's why they're on the watch list. I just want to see what happens next, but I'm not going to spend too much time on them. We all know what the story is with Nat. You've probably all watched loads of videos on them. I couldn't talk about hype stocks without talking about these fellas. VTIQ stock, or what we're actually investing in, is Nikola Motors. So again, I made a full video on these guys, and when I made that video there was still a lot of hype behind the stock. The stock price was still climbing, and since then some things have changed. If you don't know who they are, they want to be the next Tesla essentially. But look what happened, guys. From their lows they pretty much shot up over 160%, and then since then they've came back down 25%. So again, a pump and dump? Who knows? I actually do really like the look of this company, and that's why they are on my watch list. Again, I haven't invested in them, and 99% I won't invest in them next week, but they will be staying on the watch list because there is so much hype behind them, and I know that a lot of people are going to be asking me questions about them. But again, if you want my thoughts on the actual company, check out the video I made on them. But that was it to start off, just nice and easy, 2 hype stocks. Next up, I have 3 rates that I want to get into my collection. So the first one we're looking at here is Realty Income, and I do own these guys already, and we can see that they have a dividend safety of 70, a dividend yield of 5.59%, and an uninterrupted dividend streak of 25 plus years. So for a REIT, these are fantastic numbers for us to be seeing. And obviously what's so nice is that really nice dividend yield. So we can see that Realty's rent in April beats peers but is still problematic, and rates are in a problematic place right now. A lot of places aren't paying their rent, but that's exactly why they're on my watch list, because these guys, a lot of them have been hit quite hard, and we will go through that, but there is still room for them to go further. A few of their largest tenants by rent, we have Walgreens, 7-Eleven, Dollar General, FedEx and Dollar Tree. So some big boys in there. And we see with these guys, from peak to bottom they went down about 48%, and they're still down as of right now very close to 40%. So they're still down an awful lot compared to where they were only a couple of months ago. But that is not strange to see in this sector right now. They're not performing all that bad. So next up I want to speak about these guys, and these are one who is not in my portfolio just yet. We can see they have a dividend safety of 73, a dividend yield of 7.61%, and a 21-year uninterrupted dividend streak. And what I really like is that they collected over 95% of April rent, and they expect earnings to more than cover the dividend, which is absolutely fantastic, especially in such an uncertain time like it is right now. From highs to lows, these guys went down about 50%, and they're still down about 38%. So they've done very similarly to Realty. So these are one that I more than likely actually will pick up next week, because I'm always looking to get new companies into the portfolio if I do believe in them, and I love the look of these guys. In the last 5 years for these guys, you know what, there's been a lot of sideways movement, but keep in mind they have that big dividend, and ultimately there still was some absolutely fantastic growth. They were up at $93, started off about $63. In 5 years, that's not a terrible return for a company with a dividend of 7.61%. And again, what I like about these guys is just how diversified their portfolio is. They own over 1,100 properties located in 25 countries around the world. Their portfolio is broadly diversified across tenants over 300, none greater than 4% of rent, industries over 25 industries, and property types: industrial, office, retail, storage, and geographies. 37% of sales are outside of the US, primarily in Western and Northern Europe. So extremely diversified portfolio. They're doing quite well. They took in 95% of their April rent. They can afford to keep paying that dividend. It looks good to me. They're still down about 40%. Love to see it. So this last one, the third rate I want to speak about, is U.D.R, and these guys actually aren't on Trading 212. So if that's your broker, not going to happen. I do want to open up another investing account in a different service relatively soon, though, all going well. Free Trade, some of you may know, are opening accounts in Europe, and I actually did get an email from them saying I may have an account soon, so maybe they will have these guys. But still, looking into them doesn't hurt, okay? So U.D.R, dividend yield of 4.14%, so lower than the other two. Dividend safety 71, and a dividend streak of 10 years. So you know what? Compared to the other two, it is a little bit underwhelming, but I do really want to get into more rates. And these guys have actually performed a little bit better than the previous two. We can see that they dropped 41%, and they're currently down 31%. So they have outperformed the other ones. And these guys' 5-year chart is actually really, really nice compared to the other two. That's why I did like the look of these guys, despite the fact that dividend's a little bit lower. They've just outperformed the other two, and the growth on them has been great as well. I mean, the same can be said when we go to the max stock chart. Some absolutely fantastic growth. Obviously, the Great Recession hits and it's horrific, but since then, they've been rallying up and up and up. But I'll leave it there. All the rates that I am quite interested in right now, all three of them. Now, the next kind of sector I want to speak about. Okay, this next one I will keep very short and sweet because I speak about them so often, but we're having a look at airline stocks. If you follow the channel, you know just how much I love my Delta, you know just how much I love my Southwest Airlines, and that's why they're on the watch list, because this week was a particularly poor week. Delta dropped as much as 20% at one stage on the 5-day, and they finished down 13% for the week. Southwest down as low as 15%, finishing at about negative 10%. One big reason a lot of this volatility did happen and we saw some big boy drops is because the Boeing CEO came out and said that he sees one of the big US airlines going bankrupt. So that obviously, you know, put a lot of fear into people who were in these airline stocks. You see somebody like Warren Buffett decide to sell all of his stocks in airlines. Then you see the Boeing CEO come out and say that he expects one of them to go bankrupt. It puts some fear into you. And now there's more and more people saying that they don't expect them to recover to their previous highs for 3 to 5 years at the quickest. A lot of people are afraid. The stocks are getting pushed down, but as a long-term investor, I still believe in these essential services in the long term, so I'm just going to keep picking them up on a weekly basis. And so next week, I just want to see what happens. I really am interested. It could go either way. It just depends what happens next. If you just look through my channel, I have loads of videos speaking about Delta, speaking about Southwest and Airlines as a whole. You can go check them out if you do want, if you want to know why I do love them so much. But yeah, that's where I stand. Now, we're going to finish it off with the fourth sector of the day. And I just want to speak about some high dividend yield stocks, because a lot of you know, if you watch the channel, I'm trying to get some more high dividend stocks into the portfolio. So I have 3 stocks, and this is the one I want to speak about the most. So right, we have Enterprise Product Partners, we have Altria, who I've spoken about a couple of times over the last week, and I just opened a position in for the first time this week, and T or AT&T. But I want to speak about EPD first, because a few of you might not know who these guys are or what they do. First things first, they have a 10.37% dividend yield. They have a 65 dividend safety and a 21-year dividend streak, and they have come out and said that they expect to defend its distribution. And what do they actually do? They're one of North America's largest midstream MLPs with about 50,000 miles of natural gas liquids, crude oil, refined products, and petrochemical pipelines. They also own a number of storage facilities, processing plants, and export terminals. So obviously, with everything that's going on in the world right now in regards to oil, these guys are going to be performing quite poorly. But in the long term, they're going to need these guys. And you'll see that from highs to lows, down about 57.57%, still sitting down 40-ish%. So these guys have had some absolutely massive losses. But we can see, you know, for a couple of months now, it actually has been slowly trickling back up. And I do own a position in these guys. It's doing absolutely terribly. I'm down probably like 15% or something. But I do actually want to add more. Now, next up, Altria Group. I've spoken about them a couple of times on the channel as of late. I won't go into detail on them. But basically, they're not doing so good. So what I really like about these guys is that 9.18% dividend yield, a 55 dividend safety, and a 50+ year, dividend growth streak. They sell cigarettes, they're in Juul, they're in nicotine patches, they have a lot of things going on right now. They're expanding into new markets. They're not just selling cigarettes anymore. They understand that they need to expand. They took up, I think, a 35% stake in Juul. They have nicotine patches, wines, a lot of things. I spoke about these guys quite a bit in a video the other day as well, but yeah, I like them. And the very last company we're going to speak about today is AT&T. You all know who these guys are, very controversial one, 7.35% dividend yield, a 65 dividend safety, and a 36 plus year dividend streak. And they do expect to maintain a healthy dividend coverage, which is fantastic for us dividend investors. AT&T actually haven't done the worst in all fairness. They dropped 30% from highs to lows. They are still sitting down, however, close to down 27%. So there's not really been much of a recovery whatsoever. That's why they're on the watch list. I do own a position in these guys, and I just want to get more shares and increase that juicy dividend, guys. But that was it. 10 stocks that I will be watching this week. 4 different, subcategories, all for you different investors. But hopefully I was able to put something onto your radar so you can add it to your watch list. If you enjoyed today's video, guys, please smash that like button if you haven't yet. Subscribe to the channel if you're new around here, and drop me a comment. Let me know what stocks you are looking at next week. Hope you all have a fantastic day, guys. Peace.